Hey, hi everyone. Welcome to this webinar on SEBI's latest regulation. We are pretty pumped up about it. So we have sent out a kind of PR release from our end. We put up on our Twitter handles, Twitter and other social media handles, also on the website and also on the mail, right? So, but still we wanted to get on this call, this webinar to explain it in little detail and answer any questions that we have. So first I'll run through the basic updates. It wouldn't take more than 5-10 minutes, and then we will open it for Q&A, question and answer. If you have any questions, you can start posting in Q&A so that we can start taking it up. Yes. So what has changed is like, so earlier, let me start with, there are two type of issues, that one are public and one are private. We'll get into those details later. But currently, if we before this regulation, if we wanted to do a public issue, the minimum issue size was 100 crores. So all the issues we were doing was in the range of 20 crores, and those couldn't be done publicly. So we were doing that privately, and and getting it to retail investors. Now, SEBI has removed SEBI has removed that cap of minimum issue size of 100 crore. So even 20 crore issue now will be publicly done, right? So that changes many things for investors. So one is that investors will be able to apply through ASBA Demat facility. Second, even 5-10,000 transaction can happen on exchange. So you don't need to pay to Wint or buy the market transaction, right? So before we move further, let me explain you the difference between public and private issues. The first major difference is generally public issues are made for retail investors, private issues are meant for institutional investor. That is the kind of the spirit that was there, right? So in private issue, Wint first subscribes. So if the issue size is 20 crore, then Wint itself pays 20 crore to the issuer, in this case NBFC, and the bonds are first created, and then these bonds are listed, and then we downsell it to retail investor. In public issue, let's say if the issue is of 20 crore, retail investors can directly apply in the primary. So this is more like IPO of debt, right? It's like debt IPO, right? So that is the core difference. Now, because the issue is, if the issue is private, then minimum transaction size on exchange was 10 lakh. So therefore, all the bonds if you were buying, they were off the market transaction. So you used to pay through payment gateway to us, right? And then we used to transfer you the unit. That is an off market transaction. On market transaction will be like buying and selling of equity. So you can place, let's say, a buy order, we can place a sell order, and then the transaction will happen. Now, if the issue is done publicly, even 5,000, 10,000, 20,000 transaction will happen on the exchange. So that makes it far easier in general for creating liquidity. Also from a transaction smoothing point of view, and also many of our existing investors had this issue that these securities don't reflect correctly in Zerodha or whichever broker they have, right? Now, since these will be bought and sold on exchange, they can easily reflect the exact prices, and it wouldn't distort your portfolio rate. So those are the few changes, right? Second, it also these are like very exact changes that I mentioned. The spirit behind it is till now, like only handful of companies could do a public issue of 100 plus crores now, right? But they were like really good business who could do 20 crore, 30 crore, 50 crore. They didn't stand a chance. And retail investors could not invest in them, only because through private placement, 10 lakh plus ticket size, that is like for HNIs and institutional investors, right? So these high interest opportunities weren't accessible for retail investors, and these small businesses not per se small enterprises, SMEs, but like fairly large businesses, but not like large caps or someone. So these businesses couldn't do those issues. They couldn't reach out to retail investors. So this regulatory change enables both the sides, and encourages both the sides, opens their opportunities through the exchange, right? If you have seen, even on government securities, RBI has come out with an initiative to for direct retail participation. So all the indicators are basically saying these different kind of debt opportunities that were only available to HNIs or institutional investors are now opening up for retail investors. And if we have also talked before in previous webinars on our website, the whole idea of starting Wint was democratizing this debt asset classes and different asset classes, right? We always believe that just because retail investors don't have large sum of money doesn't mean that they are dumb or stupid, right? They can be, and they would be as wise as HNI or as stupid as HNI. So having a different type of, like, different quantum of money doesn't really change how you judge the decision, right? So the kind of regulation that has come, at least the direction it has shown, it is a big boost to our vision and how we think, right? And that will enable us to even get more and more assets for retail investor in long term, and also serve a large base, right? When the large base comes in, liquidity is sorted, the larger market benefits, more supply side players, more issuers will be ready to list their assets on exchange, right? Because today, if you have to, like, the biggest worry for any issuer is fully subscription of the issue, right? So 100 crore issue was always a problem. It is easy for 20 crore issue to get subscribed, right? So from these angles, it changes the ecosystem completely. It creates parity in this ecosystem, enables large opportunities for retail investors, enables large opportunities for these businesses which want to do issues less than less than 100 crore, right? So that's the broad picture. Obviously, it has some impact on our business, but what we are most happy about is it is going to change the market forever. It is going to open up market like ever before, right? So yeah, so Janam, can we move on to the next slide? Right. So now minimum investment in public issue can be 10,000. In private placement, it will be 10 lakh. So that is amply clear. Before this, if the private placement issue was done and in the off-market transaction, it could be 10,000, 20,000. Now SEBI has also stopped that. The reason here is, as Wintwell, we are very careful about, in fact, very much vocal about educating the investor about the risk involved. We often say that risk is part of the product and not something that has to be mentioned in a side note or asterisk, or to be mentioned on double speed. But unfortunately, many players in the wealth industry, there is a lot of mis-selling happens, and especially retail investors are prone to mis-selling. So therefore, and that mis-selling is even more possible in private issue because a lot of documents are not available. Like, we make sure that all the documents are available on our website, but many of the times wealth houses or whoever is dealing, right, whoever is selling those securities may not be that transparent with the investor, and investors can make wrong decisions. So they have therefore stop private, like a smaller ticket transaction even in a private placement. So that is the logic. It obviously makes sense, because if the issue is accessible through public placement, then why bring in retail investors in private placement? That is the logic, and it makes complete sense. So going forward, if it is a publicly issued, the ticket size, minimum investment or transaction size, whatever it is, in the range of 5-10,000. In private placement, it will be 10 lakh or more. Right? So that's the baseline henceforth. Right? Can we go to next slide? So our thoughts is like, we are pretty pumped up about this, because that gives us there are a lot of factors why we are pumped up. One is it is what it is it supports our vision. It supports our belief that retail investors deserve better. They should have access to these high yielding opportunities, right, which they didn't have access to before. And that was the whole point of starting Wintwell. So we stand vindicated, we stand supported on that, and that's a very good feeling to have. So that is from an emotional point of view. From business point of view also, it enables us to onboard more and more retail investors. More distribution channel can be opened up through broker partnership. It also gives us confidence for our supply side issuers to issue these bonds for retail investors, right? Because whatever ambiguity was there, whatever confusion was there, has been completely removed, right? So it helps the ecosystem grow. Unfortunately, we are at right place at right time. to take this benefit, forward, and make it so. Now we are bringing covered bonds of NBFC. We are shortly planning first covered bond by a non-NBFC player, and then many more issuers, many different type of business. We are bringing in different kind of debt assets, right, for retail investors. And this regulation certainly help us as a platform, issuers, and the investors. So it's a win-win. Like we are more than happy actually with the whole development. Can you go to next slides? Yeah. So what does this mean for new issues? So we, for a public issue, generally there is a lead time of 6 to 8 weeks, right? So next public issue will come after probably 1.5 to 2 months. We are planning to do one small private issue because we have a pipeline and these businesses need money. But the transaction size will be 10 lakh, and it also helps make some revenue because for next 2 months we will not be having any revenue or any good business, right? So that also helps us, right? And beyond that, we also want to test how it works in private placement and public placement. So there will be hardly any private issues that we will do. Most of the issues will be public. In fact, we have started working on 3 public issues, and that pipeline should develop, and we should get idea in 3 weeks how they are faring, right? So that means that people will be able to apply this through their ASBA account, and then even in the secondary market, buying and selling can happen on the exchange. So with the balance that you maintain in your broking account with your broker, you can buy or sell these securities, right? So that changes for new issues, and it's a great change. Can we go to next slide, Janam? Yeah, what does this mean for our existing investors? So first, I want to congratulate all the existing investors. Because of them, this change was brought in. Some of the existing investors are pretty down with the fact that they may not have priority access etc. But in larger thing, this let me tell you that this will unlock more and more assets for retail investors, right? So and we are also figuring out way where we'll talk to regulator if we can in a way give preference to our existing investors and also to the new investor, because our job is these assets classes are new, so there has to be some education before letting people invest, right? What we have been doing very actively, whether it is our education team, whether it is on our website, whether it is through our webinars or the calls we get on or the Zoom calls we get on, right? So from that angle, we still want to make sure that retail investor get educated before investing in these asset classes. How much that is possible, that we would be able to get a sense in next 3-4 weeks, right? We have all the inclination towards making sure that our existing investors get some preferential access or etc. But how it goes, we have to check the regulatory frameworks and obviously work within it, right? And for the issues that have been done, nothing changes. These regulations apply only for foreseeable, the issues that come in the future. For issues that have been already placed, nothing changes, right? So that is also amply clear. So ticket size is still in the range of 10,000 for the issue that have happened, right? So that's the brief summary of this regulation. Now we'll open it for Q&A. I'll also ask Anshul to join me so that we can take on the Q&A. Thanks everyone. Yes, so Amit Mittal has asked, how does our business model gets affected? So actually it doesn't get affected. Like a couple of people think that NBFCs can directly go and do the public issue on just by themselves. The thing is that public issue takes a lot of compliance work, lot of education, lot of creating buzz in the market, lot of educate like lot of marketing in a sense. People should know, hey, this. And second is the whole point is we do a lot of due diligence, we do monthly monitoring, right? So otherwise it is very hard for general retail investors to invest in NBFCs. These are not branded. If it is like branded NBFCs like Bajaj, Mahindra, Godrej, then it is far more easier for retail investor to trust. But when these NBFCs are not branded, so and most of our partner NBFCs are not like big brands yet. Many of them will be in future, right? But they will still work with us. So nothing changes for us as a business model. It certainly changes how transaction happen, but as on a business model, it doesn't change anything. Will Wintwith website still tell us upcoming issues and performance report? Yes, absolutely. So even that assets that we publicly bring, we will keep doing monthly diligence, monthly monitoring, and send reports. So as I mentioned, nothing majorly changes except how the transaction will happen, right, and how the issue will be sorted. Uh, Currently, we are doing first come first serve basis. Now in IPO and in ASBA facility, will get clarity how it happens. It's just that only those things change. Other than that, nothing really changes, right? In future, what will be the main driver for Wintwealth platform? Whether you intend to do more private issues with 10 lakh investment or you intend to do only public issues. We will be mostly doing without like if there are if in only in exceptional cases we'll be doing private issues. Other than that, we think we'll be doing 100% of the public issues, right? So the segment that we work in 10 lakh is not the really size, and that's not our focus segment, right? So we would be doing public issues, right? So that's very clear on our in our head. Shall we? Uh, yeah, the new public investment through directly through Zerodha instead of Wint, will it reflect on Wint dashboard as well? Yes, it will reflect on Wint dashboard for sure. Yes, you can subscribe through. We will make sure that you are able to subscribe it through Wint platform, or you can subscribe it through ASBA facility or your Demat account, right? So how subscription will happen? As we get closer to the first issue, we will exactly know the step and we will share that with you. But either ways, it will definitely reflect in Wint dashboard whatever you have bought. Any details on next private issue? Anshul, you want to take this?
Sure. So we are closing a private issue on coming Monday. This will be a 20 crore issuance. On the platform, it should go live potentially by 26th. We need 3 to 4 working days for listing. So hopefully by Monday or Tuesday, the issue will close. By Friday or latest by 26th, the listing will be done. And the next day, it should go live on the platform.
Yeah.
But like Ajinkya mentioned, since it's a private issuance, the ticket size for this will be 10 lakh.
Yes. Now Shubham Datta has asked this question: do we get access to bonds, debts other than NBFC? Our plan is to only bring curated products. If you are talking about general bonds that are available in the market, those are not syndicated by us. No, we don't plan to work on those at the moment. Our focus is getting more and more new assets or assets that exist but retail investors don't have access to them. So yeah, but we are going and bringing bonds or debt of other companies which are not NBFC. So that is in the pipeline. Why are you so pessimistic on private issues and not explore more on this option with your investor base? The investor base that we have is not HNI. See, as we recommend, right, diversification is a great strategy. So you should be investing in 10 bonds, right? So if you have to invest 10 lakh in one bond minimum, then you have to invest 1 crore through Wintwealth platform, right? And I don't think that this is our customer base, right? Our customer base is mass affluent, people who are in 30% tax bracket, right? Our average ticket size on the platform eventually will be 10-15 lakhs, right, per investor, and not 1 crore, right? Therefore, these kind of private issue will not work for us in long term. Earlier the private issue was only for existing clients. Is this still the case in next private issue? Absolutely. If you are an existing investor and willing to invest more than 10 lakh in the next issue, you will obviously have preferential access and people who you refer, right? So that clearly stands today as well. How do we ensure that entire public issue is subscribed? So like today, like now also, right, when we do the private placement, we have to pay 10 crore 20 crore to the NBFC. That we will keep ready. So there will be an underwriter. Underwriter is basically a player So let's say if issue is of 20 crore and only 15 crore gets subscribed, then underwriter buys the remaining 5 crore, right? So there will be underwriter to make sure that whole issue gets subscribed, and whatever is not doesn't get subscribed, we will use Wintwealth platform to subsequently sell it to retail investors. Onkar has asked this question. Are you not going to offer 10K subscription from your platform anymore? No, Onkar, we will be. It's just that the issue will be done publicly, and most of the issues that we will do will be public issues, and ticket size will be in the range of 10,000. So we are committed to it. That's very clear. Will Wintwealth investor get sure allotment in the debt public issue? That we cannot guarantee. We wish to put in place, but whether that will be possible or not, we want it to happen, but we have to check the regulations, and we will get that clarity in next 3-4 weeks. Yeah. Any plans coming up with mobile app? Yeah, this question is asked by Kiran. Kiran, since these regulations have changed, that also requires a lot of tech changes in our tech stack. So those will be prioritized, because getting public issues and making 10,000 transactions possible again is the most important thing for us now. So then we will look at mobile app, or depending on timelines, we will be prioritizing, but it is definitely in our pipeline. Muthuvel Chidambaram has asked a question. I'm new to concept of covered bond. I have invested in NCDs. Please brief it. Muthuvel, we will this webinar is regarding the recent regulation changes. We will be happy to explain about covered bond. We have done another last webinar on basically explaining all the basics of investing on Wintwealth. If you haven't checked that, it is there on the YouTube channel. I would request you to do that, and if you check that out and go through it. If you have then any questions, I or our education team will be happy to get on a call and clear all the queries. 10 lakh transfer by gateway may face issues, so advise it to do offline. Yeah, that's the plan. So we are figuring out the way, and obviously for 10 lakh and plus transfer, the transaction always gets settled on exchange through your Demat account. Allotment is like lottery-like equity IPO. We are seeking clarity on this. We will be able to know in next 3-4 weeks, right? Can public issue be purchased from any platform or only from Wint platform? You could subscribe it through any platform. Your broker is ASBA account, so that is you can subscribe to it from anywhere. So that is the basic definition of public issue. So yeah. So Rupesh has asked question, after the new changes, will we have to transfer payments to Wint, or it will be done through your Demat account? It will be done through your Demat account. So you won't have to transfer the payments to Wintwealth. In public issue, will the allocation be on first come first serve basis, or it will be on draw of lots? Anshul, do we have exact clarity on this yet?
So it can be structured both ways, Surendra sir. So let's say we open a public issue for 3 days, and on first day only it gets fully subscribed. So only those investors. So the idea is we will close the public issue once it gets fully subscribed. So that way it will happen on a first come first serve basis. But it may so happen that on the first day itself, let's say twice the number of investors have invested. In that scenario, it will happen via draw of lots for amongst the investors who have invested in the first day itself.
Sure. Yes. So this has been answered. There is one question. When is the next public issue? It will be in 1.5 to 2 months. As we approach closer, we'll announce the exact date. With the new changes, will it be possible to now pledge the assets? If no, what is the reason? Pledging will still not be possible. The reason is these kind of which assets can be pledged is decided by a regulator, and generally bonds are not preferred there. We are also figuring out a solution how to make it possible. We want to make it we want to enable it. We want to see it happen as soon as possible, but it's still little away. Yes. So there are some questions that were asked. Yeah. So first question was: is the debt IPO based on lottery system or unit allocation? If so, the chances of allotment is grim for retail investors. A majority of portion will be for HNIs or big institutions. Anshul, can you just talk about this? Key we can keep the issue that like completely 100% for retail. Could you talk about those details?
Right. So when a public issue is structured, there are different quotas defined for different category of investors. So since we want to enable individual investors only to invest in these structures, our endeavor will be to structure the public issue in such a manner that those category of investors only get the higher allocation. This might mean like the institutional quota might be like very less, minuscule only, so that only individual investors get the preferential allotment. So we are still figuring out the nitty-gritties of how to structure it most efficiently, so that targeted audience only gets the preferential treatment. And like as we move closer to the final issue, we'll come out with the details.
Sure. So will the next question is, will Wint offer private issues in future? We are doing one private issue next week, but in long term we don't see we doing any private issues. All the issues will be public issues. The whole aim of Wint is democratizing asset classes, right? So private issues are mainly aimed at institutional investors, and that's not our target category. Anshul, there is one more question. What is role of Wint in public issue? As anyone can go and directly apply for IPO launched by the NBFC. Really confused over what is Wint role here. And second question, that seconding that, how will Wint be able to charge customer with public issue as transaction is taking place on pre-decided IPO price and not on off-market transaction like existing products?
All right. Regarding the first question on role of Wentwealth, see these are like curated structures and transactions. So a structurer is still required even in the present deals that we structure. Our main role is of curating the transaction, of filtering which NBFC to partner with, so cherry picking the underlying loans which will become a part of the transaction, structuring the entire deal, drafting the documents, getting it rated, etc., and then allowing retail investors to invest in the transaction. The same curation of deal will need to be done for public issue also, and that filtering of NBFCs, cherry picking of pool, we will still continue to do. It's quite possible that some NBFCs might issue a bond on their own, but those bonds will not have undergone the diligence of Wint Wealth. So our for the deals that Wint Wealth is structuring, we will continue to do the same diligence on NBFC pools, etc. So the role of Wint Wealth will definitely be there. In terms of how we will charge our margin or fee, uh, most likely the fee will be paid directly by the NBFC. There may not be a margin in the issue per se, and the margin that we need for our revenues will be paid by NBFC directly to Wint Wealth.
Yeah. Uh, So Harish has asked a similar question. The money that make in these assets, would it be 1% fee, 1% per year fee, plus the spread between yield given to the investor versus interest to the NBFC? So Harish, I'd like to answer this. Is we generally make 1.5% per year, including the fee charged to the NBFC and spread. Right? Those are not two different things. So in public issue, we'll be directly charging to the NBFC. So there will not be any spread that will be taken from investors. So that way, investors will still get it at the same rate. We will still make about 1.5% per year, right? Uh, Liquidity option, when can be expected? This question is Sahitya, Naga Sahitya. Can you elaborate on this question? I didn't exactly understand the question. Uh, Kiran Gupta is asking question, Anshul. Will public issue of debt of an IPO also be like covered bond?
Right. So there are various public issues we are deliberating. Covered bond definitely is one of them. So the next public issue that we are targeting, it will most likely be a public issue of covered bond only.
Sure. Shall I buy and sell public investment anytime in the market via demat account, or is there any lock-in period? There is no lock-in period even today also, and there also, but it obviously depends on whether there is a buyer in the market, right? Will public issues be exclusively available on Wint platform? No. But however, the due diligence that we have done on the NBFCs, the monthly report, monitoring report that we share will be exclusively available only on Wint platform. Other than that, application of issue can be made from anywhere. Is there any difference between buying public issue through demat or Wintwell ports? There will be no difference. Pricing will be the same. And only thing is when you do it through Wintwells, you will get access. You will get we also do a lot of education, right? So we'll explain the risk involved, etc. So that way, that way Wintwells will help the registered investors. There is one question from Mr. Balakrishna. Am I a registered retail investor awaiting the next opportunity to invest? I didn't understand this question exactly. So would love to understand this in detail before answering this. Will the new changes increase the liquidity in the secondary market? Will the trade volume increase? So pre-maturity exit will be also easier. Please share your views. Anshul, you want to take it?
Sure. So Rupesh, I think immediately this may not happen, but my sense is like as since now this enabling regulation has come, the number of public issuances will increase over time, and a follow-on consequence will be the number of investors who are investing in these securities will also increase. So once that happens, once the number of investors reaches a critical mass of let's say a lakh or so, then I think yes, the secondary market for these transactions will definitely increase, which will eventually increase liquidity also. So it's a like Ajinkya mentioned earlier, it's a exciting development, and like you correctly pointed out, there will be a lot of long-term benefits, and increase in liquidity will definitely be one of them.
Yeah. Next question is whether you intend to do more of an educational channel, as there will be hardly any other interaction for public issues. So no, there are three key things that we keep doing. One is solve for regulation, structuring, etc. Second is education, and third is distribution, right? We still have to make sure these issues get fully subscribed. Investors have full access to all the available data that the due diligence that we do to make a choice whether they want to invest in this public issue or not, right? So we will be continuing to doing all these three functions. Only like the transaction will happen will happen either in primary or in secondary through the exchange. Nothing else changes much, right? Like if you still want to know more about the asset in detail or the due diligence document that we do, right, and get monthly reports, you will still have to come to Wintwell platform, and even for secondary liquidity, we will be working towards creating that liquidity, right? So the challenge still remains for us the same. We will be solving the same problem and getting more assets, right? Okay. Yeah. Anshul, the next question is, will the debt issues be still tax efficient?
The the taxation doesn't change whether it's privately placed or publicly placed. So whatever was the taxation for private issuances, the same taxation rules will continue.
Yeah. Second is, do you know if Zerodha will help in subscribing to new covered bonds? I didn't take what kind of help Zerodha is. Obviously, Zerodha is our equity investor, so they keep helping us. But currently, the problem we are facing is more not on the subscription side, but getting more assets. The issues are anyway getting subscribed very fast, right?
I guess the query can be, can someone directly invest from Zerodha's broker account if it's a public issue? I think if that's the question, yes, you can directly, you would be able to directly invest from your zero the broker account for public issuances.
Next question is, I am NRI and I have Demat account in India plus NRO bank account. So can I invest in public issue, or from NRE account plus Demat, that can I invest? I mean, does that change?
So legally, like NRIs cannot invest in regular bonds in India. However, if you happen to have a HUF which is registered in India, via that you can do the investment. But if such a HUF is not there, then no, neither from NRE nor from NRO you cannot invest in such bonds.
Will public issues be MLD?
These can be structured as MLDs also, Vikul. So the transactions that we have in the pipeline are both MLDs and regular bonds. However, if those are MLDs, then the face value for MLDs still has to be 10 lakh in primary investment.
Today, Ugro placed a commercial paper with 7.51% yield. How will you find assets in 9 to 10% range?
Right. So Amit, it's a short-term paper only. So I think the comparison is not appropriate. I think it's a 6-month CP that they placed, and the bonds that we bring are normally 18 to 24 months. And second point is this CP is placed with a bank as per publicly available data. So when and for any NBFC, if you look at the liability profile, the bank funding tends to be the cheapest, but the liquidity needs of any NBFC is much higher than what banks can meet. So non-banking funding comes at a premium, and that premium we are able to charge for our transactions.
You will get money from NBFC, but where exactly are you fitting in the legal framework of public issue? Will you be registered as distributor for the issue? What responsibilities regulator putting on you so that you have AI authority to continue to serve the customers on monthly basis? Anshul, can you take that?
Sure. So Omkar, we have applied for a merchant banking license, and merchant banker.
We have not yet applied. We were changing our MOA and everything. We have changed that, but we are making that application soon.
Yeah, so we are applying for the merchant banking license, and the merchant banker plays a key role in any public issuance, including doing a diligence, preparing a diligence report, and there are multiple other responsibilities also. So once we get the merchant banking license, we will be the official merchant banker for the public issuances that we bring to the market.
Are you planning to bring any other diversification like covered property warehouses similar to REIT?
All right, so Amit, we want to scale the covered bond to a certain volume level. In parallel, we are running some pilots, which are few of them are in real estate, and few of them are and others are like outside debt as an asset class also. Those are like quasi equity structures. So depending on the results of these pilots, we will see which pilot offers most value for our investors, and those we think are like scalable enough, we will bring on our platform. So yes, to answer in brief, we are running some pilots in various asset classes and for various structures, and depending on the outputs, we'll bring on our platform.
Yes. Next question is, did you say that public issue of MLD subscription will be minimum 10 lakhs? This takes away tax efficiency of retail investor unless he invests 10 lakhs. So could you throw light on this, Anshul?
Right. So Arun, as per SEBI guidelines, if any investor is investing in a primary market of MLDs, the face value has to be 10 lakhs. However, in secondary market, there is no such restriction. So we are working on structures wherein, let's say, Wint Wealth will invest more than 10 lakhs in primary market, and in secondary market sell it down to our retail investors. So via that structure, retail investors would be able to invest in such MLDs. But if someone wants to invest in a primary market only, which means in the IPO only, The minimum allotment application size would need to be 10 lakhs.
How do investors get tax benefit when investing in MLDs is if the bonds are not traded on exchange, off market transfer happens, and accordingly no STT is paid on them?
So Manik, the LTCG benefit on MLDs is not linked to STT that is paid on the trade. So both are like completely independent things.
And as far as I know, even for offline transfer, we have to pay that securities tax because without which this transfer doesn't actually happen, right? So that is also paid. Uh, Next question is Anshul. As Wintwealth assets were private, Wintwealth income model was in difference between interest rate of actual issue and what is sold to investor. What changes now? Does and Second question is, does Wintwealth continue to have skin in the game for future public issues brought on the platform?
Right. Two things here. I think the margin or our revenue, which we used to make by having a margin in terms of pricing, that revenue will need to be charged upfront from the NBFC, maybe in the form of fee, etc. Secondly, yes, we would try to keep skin in the game for public issuances, and even for whatever private placement deals we are bringing on the platform. In those deals also, Wint Wealth will continue to hold 2% of the asset size.
Yeah. So, does Wintwealth continue to have skin in the game for future public issues brought on the platform?
Yeah, so like I said, Wint Wealth will continue to have skin in the game for both public issuances and private issuances also. One thing I like want to add here, for the private issuances that come on the platform, earlier we as employees of Wintwealth also used to invest in those transactions. But now since minimum investment amount will be 10 lakh, so as employees we may not be able to invest in all the transactions, but as Wintwealth as company will still continue to invest 2% in all the issuances that come on the platform.
That's great. So until you get merchant banking license, you won't be involved in any paperwork of public issue. So who will be the merchant banker of the public issue? Won't that merchant banker also charge NBFC? So retail investor now needs to pay for both you and the merchant banker. So I'd like to take this question is we are working with people who already have merchant banking license, and we will be using their merchant banking license to conduct the issue. However, all the due diligence will be done by us, right? All the filings will be done by the merchant banker. And whatever commission that we charge, 1.5%, only part of that commission will be paid to the merchant banker. So it won't come to retail investors. For retail investors, nothing changes. So that I hope that clarifies. Yes. So yeah, so we have now come to end of all the questions. If you have any more questions, we are here. Or you can like, if there are no questions, we can stop the webinar. Or if you want to drop off, you can drop off. Onkar has asked another question. Wintwheels July 21 was supposed to be 10K subscription, but now suddenly you are keeping minimum ticket size to 10 lakh. Isn't this breach of trust or your part? Anshul, you want to take this?
Sure, Omkar. I think it's something which is not in our hands. It's happening because of change in regulations, and we need to work as per the regulations only. To enable our investors to still invest at a lower ticket size, we are bringing public issuances. But unfortunately, public issuances require a lot of legwork, which means there has to be a lead time of at least 45 to 60 working days. So the next issue at a lower ticket size, we would be able to bring by August end or September. For earlier issuances, I think follow-on question of Omkar is, for earlier issuances, we allowed 10K. Why not for Wintwheels July 21? So Omkar, there is a very recent change in the guidelines. This is as recent as day before yesterday. as per which the minimum face value of NCD for private placement has to be 10 lakhs. And we cannot do any trade below the face value. So essentially, when we, let's say, do a 20 crore deal and the face value of the deal is 10 lakh, what we bring to the platform are 200 units of 10 lakh rupee each. And those units cannot be further broken down. So since now the regulator is saying the face value has to be 10 lakh, a consequence of that is even in secondary market, whatever trades are happening, the ticket size has to be only in multiples of 10 lakh. It cannot even be 15 lakh. It can be 10 lakh, 20 lakh, 30 lakh, and so on. So, and it's a recent change only. Before this circular, this requirement of 10 lakh was not there. It has come in starting this Monday only. So that's why for earlier products, we were able to do ticket size which was lower than 10 lakh. But going forward for private placement, we cannot do less than 10 lakh.
Yeah, so there was nothing illegal in previous. It's just that regulation had changed, and that regulation will apply for future assets. So don't worry, you haven't broken anything. So there is nothing, no cause of worry there. Right. Yes, thanks, Omkar. Now there is one question by Rupesh. For MLD bonds, why is it not 1 year tenure instead of 15 months? The purpose of tax efficiency is achieved with 1 year period.
Yeah, Rupesh, we want to structure lower tenor deals, but most of the NBFCs, they prefer to have borrowing, which are at least 18 months in tenor. And very few NBFCs are willing to issue liabilities, which have a tenor of, let's say, only 1 year. That's why you would see in most of the deals, the tenor tends to be 15 months, 18 months, 24 months, and so on. So it depends on the negotiation with the NBFC, what would be the tenor of the issuance. So yeah.
Great. So we are done with all the questions. I also see that many of the questions may not have gotten fully answered, or you may not have gotten the exact answer that you are looking for. Right? So feel free to ping us on our WhatsApp number, on our website, or write to us and get your doubts clear. We always welcome that. Right? We would love to get on a call, explain all the doubts. Right? So that brings to end of this seminar. I hope this webinar was helpful, and hopefully we'll be back by we'll be back with a bang with new private issue. Super pumped for that. So looking forward to that. Thanks everyone. Thanks for joining. Have a great night. Thank you. Good night.
Thank you.